Good evening, everyone. Welcome to this session on order flow analysis. Uh, Before we go any further, a regulatory disclaimer from my side. This webinar and its content is only for your personal learning purposes and should not be misconstrued as any kind of financial advice. Since stock market trading and investments are inherently risky, please consult a registered financial advisor before you make any investments. So, order flow analysis. In today's webinar, we'll be covering the broader and the finer aspects of order flow analysis. What exactly is order flow? How to read an order flow chart? What does order flow contribute to your trading analysis, and how it levels up your trading, and how it gives you an edge when you analyze the markets and execute uh, positions in live markets compared to other participants. So now, how many of you are already familiar with order flow? Disclaimer, this will be an interactive session, so any questions you have, feel free to put it in the chat group, or you can ask me any questions you have at the end of the session as well. But if this webinar will cater to all those who are a little new to order flow, but also apart from that, those who are a bit familiar with the order flow. As Roshan mentioned before, this is the second webinar in a series of webinars we'll be conducting every Tuesday. So we'll be adding more and more topics to it. Now, what exactly is order flow? You see two charts on my screen, one to the left, which is your regular candles chart, and you also see a chart to the right side of the screen, uh, which which contains certain numbers. Let me zoom in. Now, I hope all of you can see the numbers a little clearly on my chart. This is a chart of Nifty and this is Bank Nifty. So you can see that this chart is a little different compared to the regular candlesticks charts that you see. What exactly is different? You see certain numbers on the left side of the chart and you see certain numbers on the right side of the charts, basically. So what exactly do these numbers mean? This is called as your footprint chart. In broader sense, a part of order flow, or you can call it an order flow chart. So what exactly is order flow? Order flow is nothing but the visualizing the orders that are flowing into the markets that have been executed by all the all the participants in a particular trading in a particular instrument or in a market. There are two ways to essentially enter a position, be it a buy position or sell position. Is it now clear, Pankaj? There are essentially two ways to enter a position, be it a long position or a short position. You can use a limit order to enter a position, or you can use a market order to enter your position. Now, both of these have their own importance and they have certain implications and intentions behind a trader who's executing these positions. By intentions behind a trader, I do not mean a retail trader here, traders like us who do not have the ability to move the markets, but institutions and large players who have the capacity to drive the markets in a certain way after they build a position. Limit orders are called as your passive orders as well. And you can see that all the pending limit orders in your broker's order book or the broker snapshot or depth of market, which you basically see. Now, these orders can be cancelled at any point of time by a trader who puts them before they get executed. So they do not reflect the intent of a trader who places the order to the fullest extent. But on the other side, once a limit order gets executed, or say traders enter the markets or exit the markets through market orders, this reflects their intent in building a certain position or in their intent to drive the markets in a certain way. Now, all the orders that are executed in the market, whether they are buying orders or selling orders, are reflect in your order flow. Basically, in a nutshell, as I said, order flow means the flow of orders in live markets, all the volumes that get executed in a particular instrument at every price point is shown in your order flow charts. This information is used to understand supply and demand in a particular instrument or in a particular market for you. This has a better edge, and this is more reliable than your traditional supply and demand zones, because you get to see in real time what exactly is happening in the markets. Now, if you look at an order flow chart, you have two sides of it. This is your candle bar, for example. The left side is called as your bid side, and the right side is called as your ask side. Now, what kind of orders do you see on the bid side? This is different from your limit order book that you basically see. On the bid side, when I talk about your order flow chart or your executed order book, the bid side represents all the orders that have been executed on the market sell side. Ask side represent all the orders that have been executed on the market buy side. By all the orders executed on the market sell side, I do not imply or I do not say that all the orders that you are seeing here on your bid side are market sell orders. By executed on market sell orders, I mean they are triggered on the market sell side. These orders can be initiated, that is, by either a buyer buying at limit prices or a seller selling at market prices. That is, on the bid side, you have all the orders, order details, the volume details of the positions which have been executed by, which have been initiated by buyers who are trading through limit orders and sellers who are executing through market orders. In the same way, on ask side, you have all the orders executed by buyers at market side and sellers at limit side. Why exactly is this segregation important for you as a trader? Limit orders do not move the markets. Any passive order in the system, say a trader puts a passive order for buying Nifty futures, 1,000 lots of Nifty futures at 19,200. Now, we are not trading at 19,200 at this moment. So only when price goes to 19,200, that order will get executed, or else that order does not get executed for you. So that trader is sorry, willing to wait for price to come to that level for his order to be filled. Now, these kind of orders do not move the markets. But say a trader buys Nifty at the first available price or the last traded price at the market, and they buy repeatedly, they keep raising the offers repeatedly. These kind of orders show aggression and intent from a trader's perspective who's trying to move the markets to the upside. This reflects true demand. Whereas those limit buying orders, they don't reflect true demand. They only show a trader's intent at a particular position to either say get out of a position, for example, or to stop the current down move, if any, is happening at that point of time. Now, as an order flow trader, it is very important to understand at a particular point of time, if you are looking at the bid and the ask sides of a footprint chart, what kind of orders are coming in and what is the possible impact of it in the markets. Any questions so far? No queries? All right. So to enable footprint charts in Quantaver, you go to cluster. And you enable it. I have chosen a special version of footprint chart called as imbalance chart. The regular version is double, but I use imbalance. What is imbalance? We'll cover that in a couple of minutes. And when I go to settings, the most important settings is the custom step or the tick size that you see. Basically, the tick size tells you the frequency of the order flow data that you want to see. As you know, in Indian markets, the tick size for an instrument is 0.05, but you don't get to see volumes being traded. You don't get to see orders at every price point at 0.05. So there is a special way, there is a mechanism to basically choose your tick size of the footprint charts. The standard textbook version of it, the standard version is to open ATR, your average true range, and whatever the number you see of average true range, for example 30, on a 5 minutes chart, I personally use 5 minutes charts for my footprints analysis. Use 2 times, you double the average true range and use it as your tick size. This is a textbook, or this is a standard method of calculating your tick size. You can do this for across asset classes and across instruments, say Nifty, Bank Nifty, or any stock that you want to trade, and you can review it. You can review the ATR, see a change in the market flow, and change your tick size, say once in 2 weeks or once in a month. It should not cause a lot of implications for your order flow analysis. Now, that is a standard way of looking at your tick size. I personally like to use a tick size of 60 and 120, 60 and 100 for Nifty, sorry, and 100 and 200 for Bank Nifty, depending on the time frames at which I am looking at order flow. I adjust it based on the absolute value in which an instrument is trading and the liquidity in question. But uh, those who want to use order flow across asset classes, across various stocks, or across various instruments, I would recommend that you stick to the ATR approach, since that will make your lives easy, and you will know, you will have much more clarity. So then I go to cluster. You will see a whole host of settings here. I personally prefer to use a 500% imbalance instead of usual 300% imbalance. And imbalance basically highlights those specific uh, order flow blocks. Each block in this case is for 60 ticks, which is 3 points. So imbalance highlights for me those blocks where the volume on the bid side is greater than the volume on the ask side by a certain percentage, or the volume on the ask side is greater than the volume on the bid side by a certain percentage. Since it's 5 times, so for example, you see that the number 62 here is highlighted. 62 is greater than 5 times of 8, so that's the reason why it gets highlighted. It helps me spot market orders or aggressive buying, aggressive selling into the markets in a much more easier way. I don't use stacked imbalances. I don't use imbalances for my for identifying support or resistance areas, but it basically uh, catches my eye easily in live markets when I'm looking at footprint charts, to visualize those areas where market orders are coming in. This doesn't mean that every imbalance you see is a market order, but it just I've trained my eyes to spot them more easily using imbalances. Other settings like cluster volume, cluster delta, high-low ratio, these are not some things which I personally use on a day-to-day basis in my footprint analysis, only in specific cases. I like to keep my point of control, that's the highest volumes traded in a particular block, separate rather than combined, on both on the bid and the ask side. Now, any more questions so far? Can we able to find limit orders and market orders and footprints? Yes, you can. I'll explain that shortly. The cost of software and the websites and how can you access order flow charts. This is something which Roshan will explain at the end of the session. So now, looking at this chart on an isolated basis, it will be very overwhelming for a trader. It's just numbers everywhere. What to make out from these numbers at a particular point of time, or how to analyze these are the most commonly asked questions by any trader who uses or who's new to the world of volume analysis or order flow. Let's look at the first aspect of it on how exactly to read this data. The first and the foremost aspect of analyzing order flow is that you need to have an understanding of market structure. Let's say that you are a directional trader and you are not a scalper who trades on a 1 minute or a 3 minute time frame, but you like to limit your trades to 2 to 3 trades per day, and you like to trade direction from a market perspective. You should already have a mechanism of understanding where exactly is the market positioned. Is the trend of the markets currently to the upside? Is the trend of the markets currently to the downside? And you can understand this using a variety of tools, like say for example market profile. I personally use volume profile, and you can also use CPR. I would say you can start off with CPR since it's a little less complicated, a little less difficult than using market profile and volume profile. You can start after this webinar, you can start monitoring order flow at the daily CPR ranges, the previous day's CPR ranges, and it will definitely help you a lot. We'll also cover a couple of those examples in 2 minutes. Now, when you look at this candle, as I said, you see that both the bid and the ask side. On bid side, as we discussed, the volumes are of the orders initiated by market sellers and limit buyers. On the ask side, you see the volumes, the positions that are initiated by limit sellers and market buyers. So how do you look at this data, or how do you match this data? A thumb rule of using order flow is that you don't look at the bid and the ask side orders on a side by side basis. You don't match the 31 with 265 and 620 with 275, since order matching mechanism, when someone is buying into the markets, they are basically hitting the offer present to the above, the best offer present to the above. Say the market is at 17,000, and if someone is buying into the markets, punching a market order of 100 lots of Nifty futures, then at market, the best available offer would be at 17,001 or 17,002. They are basically raising the offer. And when someone is selling into the markets at 17,000, they are basically hitting the bid side, the limit or the limit buy orders present in on the bid side. They can be at 16,999 or 16,998. Since order matching mechanism doesn't happen horizontally for you, when you are reading order flow, when you are matching the bid and the ask side of order flow, you basically match it diagonally. That is, you match the 620 with 265, 542 with 275. Is that 275? Yes, it's 275. In this candle, for example, 300 with 493. That is how you mainly start looking at order flow data. Any questions so far? Left side is ask limit sell or market buyer, right side. I didn't get your question, Shubhadipal. So we have a few questions in Q&A. Can you show the double ATR indicator usage on screen? So sure, I will just right click, go to indicators, put on ATR. The 5-minute ATR that you are seeing, just double it. If it's 20 points, double it to 40, and click on settings and change your custom steps to 40. You can review it on a bi-weekly basis. You need not change it on an every day or every 5 minutes time frame for to modify the tick size. If you do that, it will become too confusing for you and a lot of work in decoding order flow. Now, let's put on a simple CPR indicator. This is your CPR on a daily basis. Now, as I said before, the first thing that you need to understand, the first thing that you need to look at is where exactly is the market opening. This is your CPR range for previous day. We opened with a gap up, and you don't trade the opening 5 minutes. You try to understand what's happening uh, in the in the in the opening 5 minutes. Where exactly are we opening? This is very important because at every point at a particular price area when the market opens, you need to look, you need to understand, all right, market is opening at this area. What happened the previous day? You never look at markets on only from that day's perspective, because every day when the market opens, it's the extension of the previous day's session, it's extension of the previous day's period. Participants who have their positions built from the previous day will either try to exit their positions or add on to their positions when the market opens in a particular area. So what happened the previous day? The previous day we were trading above CPR. It was a decent uptrending day in Nifty where we witnessed some profit booking, but the overall structure and the context of the markets on 29th September was to the upside, right? Now, when the structure and the trend of the previous day is to the upside and we start opening lower, what is the first thing that I would like to see is if sellers are adding to their positions and will trigger the start of a new down move, or if the buyers who are present from the previous day will try to defend, will try to absorb the selling that's happening and will stop the down move. Just a moment. I think my screen is locked. Yes, here it is. Now, when I look at my opening bar on the bid side, I would like you to not simply look at each one of these numbers on in every block and try to make a decision or try to come to a conclusion, but just look at an entire bar on a collective basis, have a collective see what is the consensus, what is a majority in a particular 5 minutes footprint bar actually telling you at a particular point. In this case, if you notice the first 5 minutes bar, you see that there are hardly any volumes that got transacted at the open high. We opened at 19,653 and went till 19,660 odd levels and started moving down. You hardly see any orders that are being triggered here. Even if you do, you see that the bid side volumes are higher than the ask side, which implies that the market sell side positions, the market sell side triggers are higher. How I and then when you see that the markets proceeded to come lower in this 5 minutes bar, you see that a larger concentration of the volumes, you see a larger concentration of the positions to be present to the lower end of the bar. For example, the yellow blocks show your point of control, the highest number of orders that are executed in a particular candle. Where did the highest volumes come in a particular candle? That's what your point of control in a candle shows. You see that being present to the lower end of the bar, a lot of volumes being traded to the lower side in the opening 5 minutes. So what do you understand from this? If you have to identify market orders in a particular candle, if you want to identify on the bid side, the numbers that you are seeing are essentially your triggered by your market seller. Is a large seller coming in, is aggressively hitting the bids at the market, or if it is a passive buyer who's trying to absorb, then I like to look at the volumes and compare them both on an individual basis and the volumes present to the opposite side. If I see, for example, a chunk of smaller orders on a consecutive basis for, let us say, 3 or 4 blocks on a repeated basis, and they are also highlighted by imbalances here. They are mostly orders executed at the market by participants. So in this case, you see the 151, so 0, 96, 0, 0 here indicates there were essentially no orders that were filled on the other side. That fast the market moved, and that much the demand side was missing in the market. So these orders here were executed by market sellers. But as we proceeded to move lower in this bar, you can see that the volumes are rather increasing. 1180, 753 and 1616. Let me zoom in a bit. You can see that the volumes at this particular point have started moving up, which implies to you that, all right, the previous day's context was long, and now at this point, certain participants who were long from the previous day are now their stops are basically getting triggered at this particular point. Any questions so far? And if you look at the structure, we are still inside the previous day's CPR itself. As per applied CPR, it is indicating trending market for today. Do you think today's market is trending? See, when using CPR, you just don't look at the current day's CPR, but also you have a look at the previous day's CPR. Now, a lot of CPR practitioners know that, you see, if both the CPRs are consecutively to the upside or consecutively to the downside, and price needs to be clearly established beyond either CPRs. In this case, for a large part of the time, you see that the markets at the open, at least the open 30-40 minutes, was still inside your previous day CPR, which is a wide range CPR for you. So at this point, you can see that even though the markets were moving down, at every price point, I don't see a strong supply coming in into the markets after a certain extent. Because as I said, when I'm looking at a downsided move, I'd like to see that my bids are greater than my asks. At the same time, I'd like to see a certain intent from the market sellers, which was visible at this point. But then moving forward, I hardly get to see any imbalances at any price point. Plus, on top of it, my point of controls in a negative bar is to the downside in most of the cases. When my point of control in a negative bar is to the downside, and I do not get to see a follow through move, that gives me certain indications as a trader that, all right, even though the market trend is changing today from longs to shorts from a short term 2-day basis, I do not see a lot of shorts being added at this point that can give me a strong down move on an intraday basis. So at this point, if you notice that longs have started defending, you can see in this particular bar that the ask sides are showing imbalances, smaller chunks of orders. But before it happened, I don't see any large orders absorbing the selling that had been happening in the markets. So the structure is changing. Structure changed in Nifty to a certain extent today, but I didn't see a lot of sellers showing aggression after the initial down move, the gap down and the down move, and buyers just managed to do enough to stop a fall, but even they did not perform to take the markets again to the upside, because this is the area where a lot of buyers stops had gotten triggered, because these large volumes that you see, 1180, 1095, may seem to look like a limit buyer stepping in, but it is actually an old buyer's stop being triggered at a particular point and the order being reflected in the counterparty's books there. So all in all, when you see this kind of action, again, you see you see to a certain extent that when you see a down move happening, as I said, if it's a red bar, if I see a negative bar and my point of control is to the lower end and there is no follow through in this bar, then that's not a good sign that the markets will continue to trend lower at any point of time. And this is what I was even updating in live markets, that we are not seeing a lot of sellers action at this point, but even then buyers fail to perform. So all in all, there is a certain change in the trend indicating on a 2-day basis, but we still need to see sellers take action. The closing was not good for longs either, but today's lows are rather important for us. If you look at the chart of Bank Nifty, even in case of Bank Nifty, that it's the same thing. You see quite a few sellers entering at the markets here at 44,690, 44,650, and buyers putting up, giving up no support. But in these bars, in a consecutive bars, again, I see my point of control to in the tail of the candle and the closing is above. Again, my point of control in the tail of the candle, a large limit passive buyer entering here to absorb the selling that had been happening. So this somewhere indicates that, as I said, the market is in a state of a stalemate. Whereas if you look at the price action, if you look at the volumes of yesterday, Nifty, for example, we opened with a gap up and then we started moving up. What do you see? You see a lot of buyers entering at markets here. If you look at the ask set, you basically see a lot of, you can visualize it through imbalances. That is one way to visualize it. At any point when you see this down move, again you are seeing that here you are seeing presence of market sellers, but your POC is in the tail of the candle and the structure favors a buyer's opening. And when you see that the structure is favoring buyers at open, and then the market's moving down this way, you can't expect a lot of down move in this kind of the markets. Hardly any strong sellers present seen in this kind of the market. So this implies sooner or later these sellers will get taken out, which happened. Anyone, any questions? No questions? All right, so one thing about market order and buys, enters and exits. See, one way to identify whether a particular participant, whether a large player is entering through market orders or limit orders, is that in most of the cases when you want to visualize market orders, you see that they are smaller chunks of orders. They are smaller orders than one large order that is appearing out of the way, that looks abnormal in a particular candle. And these kind of orders, even though they are smaller orders, they still are greater than the orders present on the other side. For example, in this bar, if you see 40 bids, 315 asks, 315 is greater 1, and 33 asks is greater than 1. So this implies again 338 versus 32, 482, 122. This rather implies that these orders are rather small, but at the same time they are greater than the orders present on the other side. This implies, because these orders are showing up on your ask side, these are market buyers or aggressive buyers who are buying into the markets. Whereas if you see at this particular point, this 1100 order, this glares at you abnormally. This order is out of the way, this volume is out of the way when you look at the entire candle structure, and markets struggle to move up after this at a certain point. So this indicates to you that this is a limit seller, a passive seller stepped in, and he's trying to absorb all the buying that is happening. Any questions? So when you see such a passive seller stepping in into the markets after a particular up move, you will always wait for that area to be taken out. For example, if you mark, this particular reference, you will always wait for that passive sellers area to be taken out, because once market starts moving beyond that passive sellers area, he will have to cover his position, which itself can trigger another up move. So this would be a good location to redeploy longs, but you can see that even after the seller had been taken out, no significant demand from the buyer side has been seen. So the moment market starts again coming down below the passive seller zone where the passive seller stepped in initially, this is your cue to exit longs. This is a cue for a trader to exit longs and deploy shorts, because now we are seeing that sellers at the market are also entering at this point. And you can see that in subsequent candles as well. A lot of market selling happened in this area. A better example for this is in your Bank Nifty chart. What's wrong with this? Here you see a passive seller entering in Bank Nifty, a 1300 lot order. This seller absorbed all the buying. This big seller came in, he absorbed all the buying that is happening, and then the markets came down. Again, you see an up move. Once again, the seller struck in. You see a 2200 lot order exactly at the high of the candle. So when I want to see if there is some limit selling or limit buying happening, I'd rather look at it at the extreme ends of the candles. If it's an up bar, if it's a positive bar, a green bar, I'd prefer to see that at the end of the green bar, almost at the highs of the bar. If it's a red bar, I'd like to see it at the lows of the bar. For example, in today's case in Bank Nifty, as we saw a few minutes back, that is what happened. And you can see that this is the same area from there Bank Nifty started correcting in the second half, and you can see market sellers entering. Once a passive seller or a passive buyer comes in, for example, if the market is moving up and you see that a passive seller, limit or passive means the same thing, limit seller comes in, this limit seller through limit orders, the max he can do is absorb the buying that is happening. But for the markets to essentially reverse, you also need to see a follow through market selling, because market selling is what will trigger the market to move downside after the limit seller comes in. Or else if the market continues to move up, this seller will be underwater now. But either ways, this is a highlight, or this is an alert for traders who are trading towards the trend to exit a part of their positions and begin to trail closely. Because when these kind of things happen, if you are looking at the conventional candlesticks, you will not get these kind of alerts. But if you start using order flow, you will begin to understand, connect the dots on what exactly is happening when you look at these kind of numbers in order flow in a particular market structure, and take the necessary action in live markets. Anyone, any questions? What was the basis of your level that you shared today in pre-market on Nifty, because it took resistance from there? In pre-market or in live markets, Anuj? Explain delta divergence. Delta divergence is not something I personally use, so I cannot explain that. Anyone else? Any other queries? In live market, will market data loading issue will come? No, it will not. Anyone else? Any other questions? No? All right, then we'll quickly have a look at the Bank Nifty's movement, what happened today, and what are the possible moves that it can give tomorrow from an expiry perspective. So from today's perspective, as we discussed before, the market structure is somewhat changing and we are a little more biased to the downside, but sellers still need to show a certain amount of intent and push the markets lower. So for tomorrow's expiry trading, today's low becomes a very important reference for me. Below today's low, all the put writers who have sold puts will start to cover their positions, and you can see a good amount of long liquidation at this point. Whereas to the upside, if at all we see that buyers again start stepping in slowly at this point, they will have a certain amount of trouble. I am expecting a certain amount of trouble they will face at 44,795. So for now, 44,500 to 44,780, 790 are the two broader ranges that I am looking at. These areas will also provide a good avenue for mean reversion move. So if market is within this range, for example, if market is within today's value area, tomorrow it opens within today's value area, then there is a good chance that you can see quite some choppiness, and it will be difficult for you to execute unless you are uh, very cautious and you can fine tune your execution to a certain point. Or else if you like to take directional bets and do a relaxed mode of trading, then these two ranges is something that I will closely monitor. We also have today's point of control at 44,600 to 44,611, this area. So at open, again, if I see some selling, this will become a good point for me to short the markets and look to cover those shorts somewhere at 44,500 areas, a 100-point short. Now, depending on whether you are an option writer or an option buyer, you can choose strikes accordingly and take action on it. Now, anyone else, any further questions? Or Roshan, would you like to add something?
I don't have any questions because it is your program in terms of what levels we need to give. Yeah, I mean, if you are asking my observation about the market, I think the levels that you're talking about for, I mean, today's levels that are around 44,680. I was seeing a lot of limit sellers at that levels. I think around 585, 650 to 680 levels around that
Correct.
range. And the reference point that you're mentioning about 44,745 or 50 levels was a very strong reference point of a previous session. I think the
Correct.
not the 29th, but a session prior to that, because that's
Correct.
where we saw a lot of resistance. And because of the rollover, obviously the prices opened higher. I mean, that is because of the
Correct.
gap, 300-point gap.
Right. Right.
Otherwise, we were pretty much at the same level of 44,745 levels. So that is the level that I am also looking at in terms of the resistance on Bank Nifty. I think, and bias is definitely on the downside. If it breaks today's low, I think we could see more selling. At least the put writers will try to exit as quickly as possible.
True.
So that is the I'm not I'm not tracking the Nifty as such so much. I'm only tracking the Bank Nifty. So I'm so pretty. well aware of the levels. Okay, so I think there are a couple of questions which are
Yes,
directed to us.
I'll look at
Yeah.
these
Yeah,
questions.
first I think you should look at the questions that is directed to you, and then I will take up the question related to pricing and some of the other things.
Sure. So what does the yellow box, wait, let me scroll to the top. Can we find limit orders and market orders in the footprint? I just explained, Amit, on how to identify the difference between market orders and limit orders. Using order flow, you can identify supply demand, but how to identify if there is profit booking happening in the or not? Identifying whether profit booking is happening in a particular trend, that gets a little tricky with order flow, but again, it's not difficult. So if you see that the market is turning from a particular area, is moving down, but you don't get to see the missing demand on the other side. If market is coming down from a certain area, you would basically like to see demand missing and more supply in. If you don't get to see that, you don't get to see a lot of imbalances, and then the market is moving down from an uptrend, then that there is a good chance that it is profit booking of existing longs. But again, the most important thing here is it's not just one player who's sitting in the driver's seat of the market, who's trying to drive the markets at a particular point. The markets are far too big and far too complex for it, at least in sufficiently liquid large cap stocks and indices for one participant to drive it. So even if a certain buyer books profits, you need to keep an eye out whether the other buyers who are still present in the markets, are they will they be buying to take the markets up further, or do you see the presence of a new seller there? It's always important to focus on the 2 point effect. It's not just one parameter that triggers a market move for you. Double ATR indicator usage already done. And yellow box indicates point of control, the highest volumes in a particular candle on a particular side, Arun. CPR indicating trending market, anonymous attendee, I addressed that. Profit booking also done. Settings in Quantower for Nifty and Bank Nifty, not sure which settings you refer to. Imbalance already explained. Imbalance is nothing but a feature in your footprint chart where you see if orders on a particular side are greater than the orders on the other side by a particular measurement. That is, I use a 500% imbalance. If in this case, you can see that 292 is greater than 5 times of 53. So 292 is highlighted in blue. In this case, 257 is greater than 5 times of 50. So 257 is highlighted for me. Can you show some volume indicator and their usages? Because I think volume is a key. Definitely, as I said in the beginning, I personally use volume profile and a couple of other tools to understand the market context and to understand the market direction. There is one volume impact indicator. I do not use it. Uh, Cost for complete setup, software, data, PC configuration. Roshan can explain that. What changes do you expect now as we have daily expiry? Again, this query will take quite some time to answer. So what I personally expect is that because of daily expiry and because of a certain overlap in constituents, Anuj, as you mentioned, there is a major overlap in constituents, the constituents of FinNifty. There is a major overlap in Bank Nifty to Sensex. So any trending move that you see, any market phase that you see is more likely to stay on a day-on-day basis, because participants will have built positions across expiries rather than change. But when you see that change happens, it will trigger a very beautiful mean reversion move. But the key is it should happen, which will not be which will more often not be the case because of this component overlap and market participants building positions across expiries. I think I covered most of the questions. Can you suggest tick size for HDFC Bank and Reliance? Again, 2 times ATR, what I suggested, Shiva. Please watch the recording if you still have a query, and then you can answer it.
Okay, I think we covered most of the questions. So, in case if you have any questions, you can reach out to us on our support chat. Our WhatsApp support number, I'm sure most of you know, but in case you don't know, you can take it down. It is 7400007515. So yeah, thank you, Abhishek. Thank you all for attending this webinar, and we look forward for your presence at 8 p.m. And this particular series of webinars that we're going to conduct will be done by Abhishek on every Tuesday at 5 p.m. So you can lock your calendar for this particular webinar and probably get an idea about what's going to happen about the levels for Bank Nifty and Nifty expiries. Thanks a lot.
Thank you all, and see you next Tuesday.